Some Words for My Friends, written by Eric Voorhees, read by Stephanie Murphy. Hello, friends. Mt. Gox is gone, so let's prepare ourselves. On Tuesday, and for the rest of the week, all hell will break loose in the media. It will be blamed on Mt. Gox, it will be blamed on Bitcoin, it will be blamed on the bug, and it will more than anything be blamed on the lack of regulation. Pundits and experts of all types will weigh in on the calamity. It will be world news in a matter of hours. Get ready, because it will be an ugly week. For all of you who lost money, my heart goes out to you. Some people lost a little, some lost a fortune. It will make people sick and depressed and full of grief. Personally, I had over 550 Bitcoins in Gox. I will never get any of that back. If misery loves company, then we'll be enjoying a grand feast today. I should have known better, of course. I take responsibility for leaving those funds with an entity that had proven incompetence repeatedly. I chose to ignore even my own warnings for nothing more than the sake of convenience. Gox is still at fault, to be sure, but I have learned the lesson. I hope it is not such an expensive lesson for others. And for all you observers, please take a moment to consider it as well. Be mindful, however, that the wrong lessons are not learned, for that would be the true tragedy indeed. Let me suggest that the lesson is not that Bitcoin is broken. Bitcoin is fine. Similarly, the lesson is not that security is impossible. Those who know what they are doing can achieve it and help others to do so. The lesson is not that nobody can be trusted. There are countless good men and women in this community who are worthy of trust, and some of the very best people I've ever met. And finally, the lesson is not that we ought to seek out regulation to save us from the evils and incompetence of man. For the regulators are men too, and wield the very same evil and incompetence, only enshrined in an authority from which it can wreak amplified and far more insidious destruction. Let us not retreat from our rising platform only to cower back underneath the deranged machinations of Leviathan. The proper lesson, if I may suggest, is this. We are building a new financial order, and those of us building it, investing in it, and growing it will pay the price of bringing it to the world. This is the harsh truth. We are building the channels, the bridges, and the towers of tomorrow's finance, and we put ourselves at risk in doing so. We are at risk from accidents. We are at risk from fraud, from corruption, and from evil. We are at risk from journalists seeking headlines and from politicians seeking power and glory. We are at risk from the very market we are trying to build, a market which cares not about our portfolio, our ambitions, or our delicate sympathies. For all these risks, devastation will befall us repeatedly. Some of us will be discouraged. Some will be ridiculed and insulted. Some will be tricked or swindled. Some of us will be crushed or caged. We will be set upon by all manner of antagonists, repeatedly for a long time. So why do we do it? Why do we build these towers that fall down upon us? Why do we toil and strain and risk our precious time, which is the only real wealth we possess? Because the world needs what we're building. It needs it desperately. If that matters to you as it does to me, then hold to that thought. You will see through the smoke, and your wounds will heal. So, shake it off, brothers, for this won't be the last calamity endured before the win. Tonight, my heart is with you all. Tomorrow, my head is down, my eyes are open, and I am building toward peace and freedom. Eric Voorhees.
Bitcoin is in need of damage control yet again. U.S. prosecutors are investigating possible criminal violations by Tokyo-based Bitcoin exchange Mt. Gox. This after Gox went offline earlier this week without returning about $400 million worth of clients' funds. Mt. Gox CEO Mark Karpelès tried to quell the masses this morning, publishing on the site, quote, "I would like to reassure everyone that I am still in Japan and working very hard to find a solution to our recent issues." But no word on where that $400 million is, which probably a lot of people would like to know.
Bitcoin,
yeah, exactly, right?
You have $1.
I don't know where the $400 million is, but Bitcoin does have a lot of size investors betting on its future. Venture capitalists like Mark Andreessen, Fred Wilson, the Winklevoss twins. I don't know what size they are. I guess they're very tall.
They're tall.
Tim Draper, a lot of big names, but maybe the most important, the CEO of Second Market, Barry Silbert. He's planning on launching the first ever American Bitcoin exchange. That may be just what Bitcoin needs for legitimacy, and Barry joins us now. So, first of all, thanks for coming in.
Good to see you.
Secondly, I thought it was interesting the timing of your announcement. You're going to start your own Bitcoin exchange right when Mt. Gox takes its tweets off line and shuts down its website, and Mark Karpelès buys an ounce of weed and hides in his apartment. Who knows what he's doing in there, right? So
it was not entirely coincidental. We were planning on making this effort public probably next week, but when we started hearing the rumors, we decided why not try to counterbalance this storm that we saw coming and
the bad news with some good news.
How's it going to work?
So we're setting it up in actually a very interesting way. We're actually looking at the New York Stock Exchange model as the model where you have a bunch of member firms, all regulated, who tap into this one exchange, and we're doing it in really close collaboration with a number of banks and the regulators as well.
Okay, so this is what's interesting, because this is what I said to you earlier. You need to have some regulation in this market in order for people to trust it. You made the point, and you may make it again,
I'm not a huge fan.
That Bitcoin, part of its appeal is the fact that it's not regulated. Well, how can you have a currency that's not regulated, especially when it could be victim to situations like we've seen with
well, my question is how much of the currency itself you can't really regulate it. Someone told me this morning they should shut it down. Well, how? Turn off the internet? Yeah. They would regulate, obviously, the businesses that touch the currency, like your exchange.
But wouldn't you feel better? I mean, I would feel better if I were investing in Bitcoin to know that you were working with banks that were regulated by a government entity.
Yeah. So two key activities that I think need to be regulated. One is the exchanges, so if you're buying or selling Bitcoin, and then any companies that hold customer funds, like a bank, you should be regulated. I don't think merchants who accept Bitcoin should be regulated, miners, merchant processors, none of them should be regulated, but the banks of Bitcoin and the exchanges.
And the interesting thing here is that you have started an exchange before that had a lot of critics of a completely kind of a new asset class to be traded on an exchange, and you were very successful with Second Market.
Yeah. And we did it in a regulated way. So, you know, if you work with the regulators in a very transparent...
But with a fight first, right? I mean, when you first said we're going to start trading pre-IPO shares of Facebook, I think I recall Facebook not being totally cool with that to begin with. Right?
No. I think if you could describe it as a fight, it was really the industry trying to come to terms with the idea that an IPO is not the only and best way to get liquidity. But over time, what's actually happened is it's become very, very common for all these tech companies to use Second Market to provide liquidity for their stakeholders. And so in this new exchange business, we decided upfront, let's work with the Bitcoin industry, let's work with the banks, and let's involve the regulators on day one in the creation of this exchange.
So this, you think, theoretically solves that liquidity issue, right? Because it's tough, right? Like if you want to take your Bitcoin out, I mean, Mt. Gox aside, it's challenging.
Two big issues that this is going to solve for. Number one is you have a very fragmented exchange business, and so if you actually want to sell a large amount of Bitcoin or buy a lot of Bitcoin, you're going to move the market. So
yeah, I buy and sell Bitcoin down on like 40 Broad Street, right? With a bunch of guys that are buying and selling Bitcoin.
Well, you're big money, and so when you start dropping, the $1 million on Bitcoin, you'll move the market, and so it solves that problem because it brings all liquidity into one exchange. And
so does it do anything to solve volatility?
Well, it does, because actually the way that we're going to do this is we're actually looking at the gold market, and we want to slow down the price discovery process and maybe run really just a once or twice a day auction where the spot price gets set and then it doesn't change for another day. And so the whole idea is to slow down the intraday volatility. So that means when you go to buy a cup of coffee, the price of the cup of coffee is not 5% higher or lower, depending on the exact minute that you got to the
Barry,
coffee shop.
does it have to be Bitcoin? Could you not do this with some other cryptocurrency?
We'll set this up in a way where any digital currency, if the members of the exchange want to make a market at it, they could be on the exchange. But honestly, I think Bitcoin's the winner. And the focus really, at least at the outset, is going to be focusing on Bitcoin to dollar exchanging.
But you will be able to trade other digital currencies. Will you be able to trade Bitcoin in and out of yen and euro?
Well, so again, as a member-based exchange, the members decide. So all the regulated entities.
So a lot like the Bitcoin protocol to begin with, right? It's kind of a democratic process.
Try to be.
What's the appeal here? Why do you need Bitcoin if you could use PayPal or some other mobile payment system?
So I think Bitcoin is potentially going to transform the way that money moves around the world, the way that people think about money. And people talk about the remittance business being disrupted. People think about the payment space being disrupted. And I personally think that Bitcoin is becoming a fantastic alternative to gold. There's a lot of interest in Bitcoin as the store of value because it has a lot of the attributes of gold. But what it has that gold doesn't is actually has utility. You can now go buy, as you know, beer. You could go buy.
I spent 2 weeks only spending Bitcoin, so I didn't use dollars for 2 weeks. It wasn't incredibly easy, and I didn't pay rent and phone bills.
You did buy me some pizza, though.
I bought the whole office pizza. I bought Tom Keene some Genesee cream ale cans.
It's becoming, look, there's probably 50,000 merchants.
I bought a plane ticket.
Right.
I bought video games at GameStop. I bought stuff at Whole Foods. You can buy Victoria's Secret stuff with Bitcoin if you were so inclined.
What the banks are telling us is,
as you were, apparently,
they now think that digital currency is not going away. Regulators feel the same way, and the banks understand that exchanging money for digital currency and vice versa is a service that they're going to have to provide to their customers.
It's also key to think about some payments that we don't consider today, like machine-to-machine payments, which you're going to have to deal with at some point as more and more things become automated. Think about driverless cars filling up at people-less gas stations.
Right, but what's interesting here is that now, people like yourself are coming out and saying we would embrace some regulation here.
Of course,
right?
Absolutely. I mean, look, regulation done properly is not bad, and the only way that Bitcoin will be successful is if the Bitcoin industry works with the existing financial space, and the only way to do that is in a regular way.
By the way, Senator Joe Manchin from West Virginia came out and called for sort of a crackdown on Bitcoin in a letter that he wrote to regulators, including Janet Yellen. You don't always think of Democrats from West Virginia as the economic giants of our society, but he's a very smart man, an honorable man, I'm sure. What do you think about his comments?
Well, from what I read, it's similar to what Senator Schumer said a few years ago. And I think if you read Senator Schumer's recent comments, he's come to appreciate the possibility of Bitcoin. And Senator Carper as well has come out very positive about the possibilities for Bitcoin, again, if there's proper regulations in place.
What's it do to Western Union in the long run?
Well, look, Western Union is going to have to incorporate Bitcoin into the business. And actually, I would hope that Western Union will be one of the founding members of this exchange. We want to see the Western Unions, we want to see the PayPals, the banks, and the Bitcoin companies.
You're going to reduce their margins, though.
It's going to happen either way. It's going to happen either way.
And also, you could see, for example, transaction costs go down, but transactions rise. So, listen, we could talk about it all day, especially I.
I know.
I could talk about it all day. So, thanks for coming in. Really appreciate it, Barry.
All right, good stuff.
And now we hear from Ron Gross, Executive Director of the Mastercoin Foundation.
We've pretty much grown accustomed to all these kinds of things happening in the Bitcoin space, and GOX wasn't the first to lose users' funds. And it was GOX specifically. We've pretty much seen the writing on the wall for some time now. Me personally and everyone at the Mastercoin team are very sorry for the users who lost their funds. With Bitcoin is, as the saying goes, with great power comes great responsibility. People need to learn to be responsible for their money and really keep it either with themselves or with reputable companies. Mt. Gox has obviously shown itself for the last year to not be such a company. Protocols like Mastercoin really integrate, solve a problem that is very embedded in this unregulated space. Right, and that's providing services that don't require any trust from third parties. Now, there are trade-offs, and there will always be a need in our view, for centralized exchanges. They can provide high-frequency trading, they can provide some better integration with multiple different protocols. But as we keep getting reminded, there is a need for some other complementary players here or complementary protocols here, maybe for trading larger blocks without any trust in the system. So we're seeing all of this as one or pieces of one singular whole, and we're happy to really be leading that revolution. We have, I don't know if it's the right time to plug this, but we have the wallets coming online. We have a few of them up at mastercoinwallets.org. So we'll be happy if anyone checks that out, and that there are bounties out there for people to come and test that and play with the wallets. We're hoping to see in 2014 the Bitcoin community and ecosystem continue to mature and grow and just learn, all of us, from this experience and just be better and lead together.
This is Chris Joseph bringing you news on Next, the first true second-generation cryptocurrency for March 1st, 2014. Specifications are currently being built for Next Automated Transactions, or Next AT, a Turing-complete instruction layer similar to the Bitcoin Ethereum project, but integrated as a new transaction type on top of Next's lightweight, energy-efficient proof-of-stake blockchain. Next AT will implement a bytecode interpreter to allow a wide variety of applications to be built on top of Next. Current use cases include an automated lottery system, a dormant funds transfer application, and a project crowdfunding agent. Detailed information on the project can be found at ciyam.org/NXT. For more general information on Next, head to nextcrypto.org or mynxt.org. And stay tuned for more news on Next in the next Let's Talk Bitcoin broadcast.